Coming up on Market to Market, U.S. wind energy production surges to an all-time high. Scientists unveil the world's first hamburger made from bovine stem cells. And environmental watchdogs blame farm runoff for water quality issues from the Gulf of Mexico to municipalities hundreds of miles upstream. Those stories and market analysis with Darin Newsom next.
Funding for Market to Market is provided by DuPont Pioneer, working with growers to match the right product to the right acre. Science with service, delivering success. This is the Friday, August 9 edition of Market to Market, the weekly journal of rural America.
Hello, I'm Mike Pearson. A key government report this week revealed dramatic improvement in America's position in the global marketplace. According to the Commerce Department, the U.S. trade deficit fell more than 22% month over month in June. And the monthly trade gap of $34.2 billion represents America's best performance since October of 2009. U.S. exports rose 2.2% to an all-time high of $191.2 billion as American companies shipped more aircraft engines, heavy machinery, and agricultural goods. Exports to the 27-nation European Union rose 1.5%, and the deficit with China, the largest of any single nation, fell 4.3%. Total U.S. imports declined 2.2% in June, largely because oil imports fell to their lowest level in more than 2 years. And that's significant. America's drive to energy independence is accelerating at the pump and on the grid. This week, the Energy Department announced domestic wind production surged to an all-time high. The United States continues to be one of the world's largest and fastest growing markets for wind power. And for the first time, the Department of Energy reports that wind energy became the top source of new U.S. electricity generation in 2012. According to the DOE, wind power represented 43% of all new electric additions last year and accounted for $25 billion in U.S. investment. Last year, over 13 gigawatts of new wind power capacity were added to the U.S. grid, nearly double the capacity deployed in 2011. The expansion enabled America's total wind power capacity to surpass 60 gigawatts at the end of 2012. Enough capacity to power more than 15 million homes annually. Since 2000, America's installed wind energy capacity has increased more than 22-fold, and the proportion of towers, blades, and gears made in America has also increased dramatically. The report estimates 72% of wind turbine components installed in the U.S. last year were made by domestic manufacturers, nearly tripling the 25% reported in 2006 and 2007. According to industry estimates, the wind sector employs more than 80,000 people, including workers at manufacturing facilities throughout the supply chain. On a cumulative basis, Texas remains the clear leader with more than 12 gigawatts installed at the end of 2012. But 9 states now rely on wind power for more than 12% of their total annual electricity consumption. And residents of Iowa, South Dakota, and Kansas now rely on the wind for more than 20% of their electricity. By the year 2050, the Food and Agriculture Organization predicts that global meat consumption will double as more people in developing countries demand the highly valued source of protein. To satisfy growing carnivorous appetites without exhausting limited natural resources, experts say the world needs new ways to produce meat. But the notion of increased meat production has, at times, also fed controversy between farmers and ranchers and numerous critics who are concerned about the impact on animal welfare and the environment. This week, however, in a move that's sure to raise eyebrows in livestock production circles, scientists from the Netherlands unveiled the world's first hamburger made in a test tube. Dutch scientists served up their creation of a hamburger this week, made in a laboratory from cow stem cells. The public unveiling took place in London. Volunteers took the taste test and offered up a review of the product that took 5 years to develop.
Considering that we don't have any fat in there yet, so obviously that's a factor that affects taste. But other than that, the consistency and the taste is in my mind pretty close.
There's quite some intense taste. It's close to meat. It's not that juicy, but The consistency is perfect.
The absence is, I feel like the fat, but the bite, feels like, a conventional hamburger.
As one of the lead researchers on the project at Maastricht University in the Netherlands, Mark Post developed the burger, and he hopes synthetic meat could eventually help feed the world and fight climate change.
I think most people just don't realize that the current meat production is at its maximum, and it's not going to supply sufficient meat for the growing demand in the coming 40 years. So we need to come up with an alternative, there's no question. And this can be an ethical and environmentally friendly way to produce meat.
The public frying of the hamburger grown in a lab also spurred debate. People for the Ethical Treatment of Animals, or PETA, a longtime opponent of confinement-style agriculture, agrees this research has promise.
Today's meat industry causes enormous animal suffering and environmental damage. And if in vitro technology can be kinder to animals, be kinder to the planet, help alleviate world hunger, and make the food supply safer, then surely that's something everyone would support.
The Taste 2 burger's price tag is hard to swallow. At $300,000, one could expect fries and a shake with the culinary creation. London residents were mixed on the development.
Okay, test tube meat, it's wrong, it's not right, these things shouldn't be going on. It's really, really disgusting, it's horrible, it's unnatural, it's not organic, and it's poison basically.
I think it's great because I don't think people should be eating meat. I would eat artificial meat.
For years, scientists have identified runoff from Midwest farms as the chief cause of the dead zone, a hypoxic portion of the Gulf of Mexico incapable of supporting marine life due to reduced levels of oxygen. So far this year, the dead zone is smaller than scientists expected, but that doesn't mean the problem is solved or that environmentalists and agricultural interests are in agreement on how to best curb farm runoff. Ground zero in the debate is in Iowa, the nation's top corn producer. But the tiled fields that help Iowa farmers produce so much grain also funnel nitrates and phosphorus into surrounding rivers and streams. The city of Des Moines operated its nitrate removal system, the world's largest, for 3 months this year at a cost of more than $500,000. And the head of the utility is pleading with officials to do something about the problem before he takes matters into his own hands. David Miller explains.
Beneath the surface of the Gulf of Mexico lies a hypoxic region that has earned the dubious title of the dead zone. Due to its lack of oxygen, the area is incapable of supporting aquatic life. According to a recent study from the Louisiana University's Marine Consortium and the University of Michigan, this summer's dead zone covers 5,840 square miles of Gulf floor, just above the 5-year average. In Iowa, where net farm income topped $10 billion in 2011, water treatment plants have been working overtime to remove what researchers believe is the root cause of the problem: nitrogen and phosphorus from farmland runoff. Bill Stowe is the CEO and general manager of the Des Moines Water Works, a municipal operation supplying drinking water to 500,000 central Iowans.
Certainly there are urban contributors to runoff and to pollution. I don't mean to disparage that, but the idea that feeding the world is somehow this password that lets us get by any responsibility for poisoning our neighbors is a real problem for me.
Stowe believes the biggest misconception is that Iowa's fertile fields that produce such agricultural abundance must also yield polluted water. He notes that nearby states like Minnesota and Wisconsin have achieved a balance between regulation and farming.
If we were to avoid that and as a state fail to recognize that and move in our policy forward, we're missing the largest opportunity for regulation and for improvement. A lot of regulation on the point source polluters in the urban areas, the sewage treatment facilities, the factories that discharge into the rivers, but essentially a free pass on the non-point agricultural sources, which are the single largest contributor to water quality problems in Iowa.
Craig Hill is president of the Iowa Farm Bureau, Iowa's largest general farm organization with 153,000 members. Hill disagrees with Stowe's premise that farmers and state officials are failing to protect Iowa's water.
I think we are correct to assess that agriculture has much to do. 98% of all the raindrops that land on this state land on a farm somewhere, and these are family-owned farms. So it's incumbent upon us to do our best job, and we're working at it. We have been working on it. We can do better. You know, I think our goals are aligned. We can work together. We all want the end result to be the same.
Stowe believes regulations need to be put in place to protect Iowa's water. While there are state and federal regulations controlling many aspects of production agriculture, the responsibility for monitoring runoff from farm fields is left largely to the farmer. Stowe dislikes the idea of self-regulatory policies because they lack the legal teeth that public policy provides. Hill points out there are incentives in place to get farmers to adopt practices that reduce soil runoff, and he's concerned about the potential downside of a one-size-fits-all policy. Iowa is among the 41 states that make up the Mississippi River Basin. When rains or high water rush across rural farm fields and urban lawns, some of the nitrogen and phosphorus in the soil runs into local rivers and streams. That chemical brew feeds algae blooms downstream. The algae and the protozoa that eat them die and fall to the bottom, where their decomposition depletes oxygen and creates the dead zone. Farther upstream, Stowe and Hill believe there is common ground where both sides can work together to solve the problem.
Well, there's a balance. It is a public and it's a private stakeholder relationship, a collaboration that's going to have to be built. We're all in this together. It's a voluntary program, certainly, but success is not optional.
Stowe adamantly believes agricultural runoff should be regulated by government authorities to protect water quality and, ultimately, reduce the size of the dead zone. And he's threatened to sue the EPA, if necessary, to get it to enforce water quality standards if state officials fail to do so. For Market to Market, I'm David Miller.
Next, the Market to Market report.
Grain prices declined this week as the trade pondered private estimates on U.S. crop production ahead of the Agriculture Department's official report next Monday. For the week, September wheat lost 27 cents, while the nearby corn contract moved a dime lower. Soybeans improved modestly as the September contract settled with a weekly gain of 6 cents. Nearby meal prices rallied more than $5.50 per ton. In the softs, cotton posted a solid move north as the December contract gained nearly $4 per hundredweight. In the dairy market, September Class 3 milk lost 20 cents, while the October contract was off 28 cents. Over in livestock, October cattle gained $2.40, nearby feeders advanced 47 cents, and the October lean hog contract posted a weekly gain of just over $1. In the financials, the euro gained 54 basis points against the dollar. Crude oil declined by nearly $1 per barrel. COMEX gold advanced $2.30 per ounce, and the Goldman Sachs Commodity Index declined by more than 5 points to settle at 637.05. Here now to lend us his insight on these and other trends is one of our regular market analysts, Darin Newsom. Darin, welcome back.
Thank you, Mike.
We're still in that bearish trend, it seems, across the board, particularly this week in wheat. As we look at September and December wheat contracts, we're down roughly a quarter, a little over. What's going on in the wheat market?
Well, the biggest thing is in wheat and the other grains, there's just no interested buyers right now. We've seen some headlines come out for the wheat market that are more bullish, but we just cannot maintain any type of buying or any type of bullish momentum in this market. And so what happens is it just keeps grinding lower. We went to another new low this week. It certainly looks like we're on that path. There's no one really stepping in. So can we go lower next week? Absolutely. Now, at some point, this thing will turn around, but there's just no one interested in putting the brakes on it at this point.
And is there just no one interested in American wheat? Are they buying sources from other countries? This is a global supply overhang?
We're seeing global prices coming down, but so much of that has to do with the markets traded here in the United States. Now, there's wheat moving. I mean, every day you see some tenders, every day you see some business being done. The U.S. export business has actually picked up over the last couple of months, so that's certainly helping to support the market to a certain degree. The biggest thing is the investment side of the market, not only in wheat, but many other commodities, just isn't interested in being long. They're selling. They've actually got a net short futures position in the wheat market, and they're not interested in buying that back, and that continues to put pressure on the Chicago wheat.
So hold off, wait until we start to see the traders turn this thing around and break the spell.
You know, and this is going to be a common theme as we talk about the grains is, you know, what do we do at this point? Do you sell when we're in this big of a hole, when the markets are this far oversold, but after Monday, you know, this could look like a good price and things could be much lower?
Okay. Little downer of a harbinger of things to come.
Yeah, there you go.
So you're not bullish on Monday's report. If we do see a big price spike, you think it will be to the downside?
I sit there and I look at all the different numbers and all the different categories of you know, information, quote unquote, that's going to be coming out, and I can't think of anything outside of possibly soybean ending stocks that could be bullish. Other than that, you know, unless we've priced everything in with this months-long sell-off now, it looks like the market's going to want to be bearish once again when this report's released.
Okay, in general, producers looking to protect themselves. The report comes out Monday at 11. Anything to do Monday morning in case we do roll into sustained downtime?
You know, the CME has a number of short-dated options. You can go short-dated new crop options. You can go, you know, nearby options and so on. People might want to take a look at that on Monday morning because it should be relatively quiet. Now, what we have seen over the last couple of months is a lot of activity say in a couple hours leading up to the report. So it's almost like there is some front running starting to build in these markets, and so it'll be interesting to see if that occurs again tomorrow. But there should be an opportunity if someone wants to get some late protection on to look at some possible put options.
Okay, well, let's talk corn a little bit. We did see what we thought might be a break in the bearish trend yesterday, a couple pennies up on corn. Today we reversed. What's your thought on the corn market?
Corn doesn't have any friends. It's in a strong downtrend. It looked like at one point this week it was stabilizing and it could try to rally. But when all's said and done, we closed lower for the week. We closed lower on Friday. And, you know, this is the market where, you know, I think everyone's pointing to the most. This is the market that everyone's pointing to the most that could see the most bearish news on Monday. You know, production over 14 billion bushels, the possibility of ending stocks coming in for 2013 over 14 over 2 billion bushels. There are a lot of bearish possibilities right now for the corn market. And, you know, I've been asked, what's it going to take to see a bullish response? Maybe the report not being released would be the biggest thing. You know, something happens where it just doesn't, the numbers just aren't known. That could create enough uncertainty. Maybe that sparks some buying. But outside of that, I just don't really see anything that's going to provide support to corn.
That being the case, as we look at continued strong ethanol production, relatively strong exports, or at least beginning to pick up, is there hope down the line? Are we going to have to wait to get through harvest or into harvest before we might see
you know, it's possible, but if we have production to the level that everyone's talking about, and that's a huge question mark at this point, you know, the next issue is how much is demand still going to be cut? Are we overestimating demand right now, meaning that we aren't going to see it build back after losing ground these last 3 years due to tightening supplies? So that's the real threat, is that demand doesn't come back to the degree that everyone's talking about at this point. And if we don't have the demand that we think we're going to, and we have a larger crop, say 14 billion bushel plus, all of a sudden we've got an abundance of corn available, and that's going to really weigh on the market.
Okay. Well, let's talk soybeans. We did get good news in soybeans yesterday. Strong export sales to China. They've got continued hot weather over there. Crop outlook's not looking so good in China.
Right.
Yep. Beans continue to, well, we did see a little gain, but we sold off today.
Saw a little gain. We saw, you know, Thursday had a solid rally, but, you know, by and large, the market is struggling. And we have seen good export news, particularly in the new crop market. You know, week in and week out, we get the headlines. Then the following week, we get the updates on the export sales and shipment reports. But again, just as with these other grains that we've talked about, there's just no interest in buying these markets right now. And, you know, even with a bullish fundamental outlook, even with, you know, commercial traders still trying to own some soybeans to get them shipped, it's just not enough to provide support. And so when all's said and done, the dust settles, the market's worked lower again.
Now, the acreage recertification they're doing on soybeans going to be a market mover, do you think?
Well, it just means it's just another month when we really don't know what's planted or what's going to be harvested. So there'll be further revisions as the year goes along. I think the biggest thing will be new crop ending stocks to see if that actually comes in below 200 million bushels, which is what some are suggesting.
Okay, keep our eyes open.
Exactly.
Now, as we take a look at the livestock market, as we look at fat cattle, we're seeing some strength in the market this time. Is that being reflected in the cash trade? Are you sure?
You know, it sounded late in the week like we were seeing some buying in the cash, but what we're really looking at right now is the possibility of a much stronger cash market later this summer and then later this fall. So it looks like the market's really starting to get going. We had some headlines come out this week that looks like it's going to provide some support, and if nothing else, it's going to provide this short-term boost, and then maybe when things start to calm down a little bit, then we see the markets pull back somewhat.
Now, the headlines you alluded to, Tyson Meat not slaughtering after September 6th, cattle fed the Zilmax beta agonist. And the concern is that that's going to reduce the supply of cattle across the board.
It's going to stretch it out a little bit. So the beef isn't going to be readily available on hand. I mean, they're going to hold them in the yard a little bit longer to get them up to weight, or they're going to be selling them at lighter weights. And so it's going to possibly reduce short-term beef supplies. And that's why we saw the October contract really react more so than many of the deferreds. Strong commercial buying coming in, some investment buying as well on this news, which is the scary side, because if once this story gets old and they start to work through some of the particulars, that same group that was buying could turn into sellers again.
We get that strong uptrend we saw this week turn into a strong downtrend if they decide to exit.
It's always possible, yeah.
All right, now looking at this stronger fat cattle trade, that's giving some more hope to feeder cattle producers, because we are seeing feeder prices continue to climb.
Right, and another big thing for the feeder cattle market is this lower corn. So you've got the strong live cattle market, you've got a weak corn market, you've got a lot that's sparking this renewed buying interest in feeder, something that we haven't seen for a while, and it's really starting to catch fire. It's really starting to move pretty well, and so again, as long as we can keep the corn market under pressure, and as long as this live cattle rally wants to hold together, I think feeder cattle are going to perform pretty well.
Now, if we roll through, as you were mentioning, October, we get the lightweight beef into the system, start to put some pressure back on fat cattle prices. Would that have a significant effect on feeders, or are we primarily being driven by corn at this point?
I think the biggest player right now is corn. If there's talk of going back down, and I mean, not talk, there is talk of the market possibly going back down to 2008 lows. If we see that down in the low threes, your feeder cattle market's going to look pretty good. I think it's going to stay well supported. If somehow corn puts in a low in here and starts to work back higher, starts to find some buyers, some non-commercial short covering, some increased exports once we get into the new year, maybe at that point that puts a top in the feeder cattle market. So I think a lot of it is going to hinge on what happens in corn over the next few months.
Where this December corn in particular contract
heads
as we roll into harvest.
Right.
Now let's talk about lean hogs. Been a compelling story. We've talked about it week after week. It continues to climb. This week, deja vu all over again. We're up another buck. How high can we go in hogs?
The hogs look like they just want to keep moving higher. They're well supported by the cash market. We've got good demand for the hog, for pork. So right now it looks like maybe we want to test some of the highs that we saw earlier this year. The October's got a nice base building under it. It's not just one of these spike rallies that fall apart. It's going up and it's finding new buying and it's continuing to push higher. So it looks to me like it's a market that's gaining strength. It's gaining the right kind of strength. So in other words, coming from the cash and commercial side. I really don't see this thing breaking. Of course, hogs can be hogs, and at any time they can change their mind. But I don't really see it breaking anytime soon.
And again, primarily, what's going to be the driver? Are we looking at corn prices again as the main?
Partially, but the biggest thing that I see in the hog market is as long as we can keep a strong cash market underneath it. That plays such a huge role in the livestock, but in hogs in particular. So certainly keep an eye on the cash hog market.
All right, keep an eye on the cash.
That's right.
Thank you so much, Darin. Appreciate you being with us here tonight.
All right, thanks, Mike.
That wraps up this edition of Market to Market. But Darin and I will continue our discussion and answer some of your questions in our Market Plus segment on our website. You'll also find audio podcasts and streaming video of our program, as well as links to our Twitter feed and Facebook account exclusively at the Market to Market website. Be sure to join us again next week when we'll examine the market impact of the Agriculture Department's latest estimates on supply and demand. Until then, thanks for watching. I'm Mike Pearson. Have a great week.
Market to Market is a production of Iowa Public Television, which is solely responsible for its content. Funding for Market to Market is provided by DuPont Pioneer, working with growers to match the right product to the right acre. Science with service, delivering success.